it looks like Nvidia was dethroned as the king of exciting stocks in the stock market for the next couple of years. When you read or watch the financial media, you might have seen or heard the term bellwether. A lot of people don't know what that is, but they hear it. Nvidia is a bellwether in two ways. A bellwether is the leading sheep in a flock of sheep. It wears a bell around its neck. It's the leader of the group. And Nvidia is the bellwether of the stock market in general lately, or it has been. It's also been the bellwether of the semiconductor sector. It's not only the most popular stock in the semiconductor sector, but it's actually been one of the strongest performing semiconductor stocks in the entire group. But here's the thing. Most investors, they're going to think I'm crazy for this, which frankly I've grown used to. But love for the semiconductor sector that we've witnessed over the last 2 years might have just ended. I'm Chris Rowe, and this is Sector Edge. Visit this page regularly because we're going to update it with a new video at least every few days. We're going to try to do it as often as possible. Going to try to get it up to daily videos. So let's see how it evolves. It's really up to you and your reaction to it. This is the first of its kind. I don't even know if you can like or share it or comment, but if you can, please do so to show your appreciation if you want more, and we'll be able to do more. Last Wednesday, the world's largest investors cast their votes in the stock market after the election happened, and they had the day to react in the stock market, tipping their hands on which sectors they're going to be focusing on buying for the next couple of years. So there's no question that tech is by far the sector of the stock market that's the most fun to think about or talk about at Thanksgiving with your market trading cousin. Its subsector, semiconductor stocks, have by far and away been the strongest for years, and Nvidia has been the most talked about stock in that group, no doubt. It's also been one of the best performers, holding steady whenever the semiconductor sector sold off. So maybe the stock by itself will be just fine. But that rising tide that lifts all boats, the semiconductor sector, might just disappear for a while. Using the logic of focusing on sectors first, because sectors are about 80% of the reason any stock does what it does to begin with, tells us that only the semiconductor stocks might cease to feel like you're swimming with the current. It might stop feeling like you've got the wind at your sails. Here's how I know. I gave you the odd topic to bring up at a bear market low. Remember the bear market low, November 2022. That was 2 years ago, it was after the midterm election. So I told you, based on what my indicators told me, after the election played out, after the world's largest investors had a chance to react to it, I told you semiconductors, which were then 45% off their highs, would likely be the strongest of the 45 sectors for the following 2 years. It turned out 2 years later that that was exactly right. But using the same methods that I used to make that call 2 years ago, I'm now seeing something that says semis may not be the place to be. Definitely not one of the strongest places to be. Trust me, I'm shocked. I can't imagine semiconductors, the brains of technology, the group that the government's spending hundreds of billions of dollars on, and the group that makes technology work, can't imagine this not being one of the strongest sectors. But I trust the data revealing the price behavior over my own opinion. I don't know more than the fund managers moving trillions of dollars around the global financial markets. And those ultra-informed investors show us what they'll be doing for the next 12 to 24 months in the days following the presidential election. You want to avoid trading based on your past understanding of past markets. I give you this warning every couple of years. It's the most important warning there is. You're currently living through one of those few times in your investing life where you might look back and say, shoot, this is where I started messing up, right after the election. The hardest thing for investors to do is let go of the past, and it's an expensive disability. They hold on to an old story, and they get slammed. Since price behavior changes before the story is apparent to the world, everyone still singing the same old song is behind the curve and investing using a playbook that's no longer applicable. For example, after a ferocious 5-year bull market from 2016 to 2021, market participants were locked into this feeling of extreme bullish sentiment. They were suffering from complacency. And rather than simply making a prediction about the upcoming bear market that we were seeing, True Market Insiders and I also focused on explaining the most expensive mistakes investors make and how it was in play at the time. That mistake was the inability to let go of their embedded sentiment of the past, which was that people thought that they were in a bull market that just corrected, and instead just adapting to the next phase of the cycle, which we were in at the time. I'd been telling everyone to let go of their past stance, make that shift to bear market mode, which is a completely different playbook. At the time, that meant accepting that after the 5-year advancing stage, the 2021 topping stage was ending and the declining stage was beginning. And you had to let go of the past. People were still not clear on whether or not they were still in the advancing stage. And we were trying to not only make some sort of a prediction that we could brag about later, but more importantly, we wanted to try and condition our readers to know what's actually happening, which simply is to let go of the past and accept the new rules. It's so important to quickly adapt when changes happen, like right now. So while it's true that we like to watch closely what happens to the semiconductor sector and keep an eye on the leader, Nvidia, we absolutely must accept that semiconductors, the sector, is no longer the big dog. In fact, it was one of the weakest sectors after the election. Look at this, ranked 45 out of 45, dead last in the day following the election. That's a big signal. Successful investing or trading is only partially about timing or knowing what areas of the market are likely to perform best. An overlooked but critical difference between successful investors versus those who are unsuccessful, it's not the ability to see the shift taking place. It's not enough to know what's likely to happen next, but a major missing link, the key that many people are missing, is the instinct to then act on it immediately. To act. This is something you need to act on right away. Change your mind, shift your thoughts. My job is to guide you into areas of the market that are likely to shine brighter than others. Let me lead by example here. I just did a big event where I talked about 3 sectors going into the presidential election. You can see that event. It's linked below this video. These 3 groups that I talked about were great buying opportunities going into the election. One example was I talked about the protection safety equipment sector. I wrote you a report on the sector and stocks that I liked in the sector. One of them was Axon, AXON. That's Taser. It was at 420 on Friday, October 31st. Today, it's November 11th. Not 2 weeks later, it's at 6:03. You can actually watch that recorded event using the link below this video if you'd like. Please feel free to check it out. It's just as relevant today as it was before the election, except for one update. One of the sectors going into the election that I liked was the semiconductor sector. But now, after I watched how it behaved on my platform after the election, seeing things that most people can't see, and after the world's most powerful investors showed their true colors, they had a chance to trade after we knew Trump was in, semiconductors fell off a cliff. So the signal that we got now is that semiconductors, they were dead last. Perhaps they will be a strong sector. They might even outperform the general market. I mean, I can't imagine them not doing so. But they were not at the top. They were dead last. So now's the time to start thinking about other sectors. Now is the time to start thinking about the sectors that are the strongest and that were the strongest after the election. Precious metals is another one. Precious metals did not do well after the election. It dropped from the top rankings down to the bottom. You want to let go of the past. You want to focus now on what's behaving in the strongest way, with the strongest price behavior immediately following the election. Now is the most important time. It's the time when the stock market gives you the answers to all the questions that you have for the next 2 years. This is Chris Rowe. This is Sector Edge. I hope you come back and watch future Sector Edge videos. See you on the next one.